Markets make new highs. Is this time different? What's up, everybody? Welcome aboard to Bubba's Bottom Line. Always great to spend some time with you. And our first thought of the day is out to the McCain family. Senator John McCain passed away over the weekend, and our thoughts and prayers go out to your family and wish you Godspeed. In the meantime, equities made new highs. Again, we've said this on this program and on the daily update that we would not be surprised to see the markets make new highs. And sure enough, all the indices but the Dow have made new highs, and I'm sure the Dow will get there as well. The Dow's only impediment is the trade wars, because so many of those companies are more involved with what might happen with trade. We believe that trade will settle. Again, I haven't changed my tune, and all the rhetoric and all the BS that's out there, and all the fretting and the wiping of the brow and everything else, I will guarantee these talks will settle. It's just so illogical to watch, but this is the way, that we have to see things go on. Everybody's got to put on their show, put on their dance, and of course the pundits and the advisors will continue to be worried and go through all of it. In the meantime, it's very evident to see. Yes, the commodity markets have sold off a little bit, but they're certainly not anywhere near their lows. So we'll see how it plays out. But I thought it would be a couple of weeks ago. It would not surprise me that at any day that these fears and talks settle. But in the meanwhile, the markets do continue to go higher, and it's on very, very light volume. It's on virtually no volatility. We continue to see the VIX get crushed. But that's the point, okay? Markets are quiet. Markets are slow. So why would we expect any different? This is one of the things that you have to understand about how the market functions, okay? Markets are slow. They're going to most likely drift higher. If you look back a little bit in history, you will see that when markets are going down, especially at the beginning, okay, they're very fast, they're very rapid, and they're extremely busy and full with volatility. Okay, when we get into a deep bear market cycle, then they get very slow as well. But right now, we are in a very slow cycle, pushing our way higher, basically almost on a weekly basis. Now, we are not predicting that this week is the end. Certainly, I would be surprised if a big sell-off started this week, because we're going into, we call it Labor Day week. This will be an excruciating slow week, in my opinion, unless there's some major announcement. And the only major announcement that would create some real action would be one that would push the markets down. I do not see that happening this week. Now, again, we're always prepared and we're always ready to react. But I see most likely the markets dribbling higher, continued. I would not at all be surprised to see the Dow finally make its new high. Again, that is what we've expected all along, so there should be no surprise. We look for NASDAQ 8,000. We look for probably, the S&P over 2,900. But at the end of the day, we are looking for a spot to sell. We are looking for a reason to sell, but we don't have that. So with no volume, no volatility, and no reason, why would I want to get short here? Okay, again, there's no better position that I'd like to be in from a trader's perspective than a short. I believe the markets are extremely overvalued because, again, they continue to tell me that this time is different. They continue to tell me that nothing matters, okay? It doesn't matter that the debt is going higher massively. Everybody wants to continue to tell me that's not important. Well, again, we all know it's going to be important when it falls apart. But for right now, you've got the Fed, which will be in my commentary today, but you've got the Fed continuing to keep dollars cheaper. And I think that I heard the best example. I think we used this last week as well. But the debt service, when we had a $6 trillion deficit in the year 2000, was $500 billion a year. Now that we've got $21 trillion, the debt service is only $625 billion a year. Just. But again, so the debt service is not caught up to anything else yet. So that is one of the things when you talk about the overall debt bomb that is going to happen. Again, this is not different. This is not new. But you have a lot more people out there right now trying to convince you that it's different, that this time is different. But we should all recognize from history that it is never different. Okay, again, let's recall and go back into the history of markets, the history of finances, the history of any economy. When you get overloaded with debt, eventually that debt cannot be satisfied. Now, we've been talking about this debt bomb for a couple of years, and we've said for a couple of years that let's not try to make that the sole story yet. It will be the story. But for now, you've got too many believers, you've got too much free capital, and you've got too many people trying to chase the market because, unfortunately, for the savers in this world, unfortunately for the retirees, the people that don't want to take this kind of risk, they are being forced into the equity markets. And I think that that's something that you have to understand, that money is being forced in because there's nowhere else to go. Now, I've noticed that Edward Jones has done something nice with their CD rates. They're actually up paying CD rates than you can get at a normal bank. So I think that's interesting, and that's telling you that they believe that rates are going to go higher because, again, brokerage firms like that are playing the odds of what interest rates will be sometimes. So I think that's something that you have to look at and understand that we're going to see at some point here, the rates are going to take off, and that will be something that we have to look at. Now, last week we saw oil had a massive move, well, not massive move, but 6-7% move to the upside. Now, again, it's not, the rally itself was not a surprise, okay? The rally was, again, we'd assumed and we said that we should get a bounce off of 64. I did not see it going to 69, okay? But it did, excuse me, and that's really what we have to look at. Now, again, I think that oil is still worthless. I think it's still a big sale. But I think one of the things you're starting to see is there's the worry that, well, what if we run out of energy because we're now exporting? There's a couple of points to that if you want to look at. Now, I don't typically look at that stuff for myself from a trading perspective because that's too much of a fundamental data, which never plays in the market at this time. It may play out eventually, but in today's world, we have, just the United States alone, we have a 200-year supply of oil in the ground without affecting the greenies, without any new findings, without any problem. There's a 200-year supply, okay, under current usage. Now, we know there's a lot of oils that if it became desperate that it had to affect the environment a little bit, there's places to go. But if you're going to tell me that in the next 200 years, okay, we're not going to find an alternative, okay, or not how to figure out how to use natural gas, or not how to figure out how to use electric or the sun, then I think that there's a much bigger problem. So the fear being created that we maybe possibly someday run out of oil is a bunch of crap. It's just another one of the BS things that are said and put out there. Now, we talked about what's going on with gold. Gold, we were looking for 1180, and gold came down to that 1180 level. It actually, overnight last week, traded 1167. But notice how we had the nice little rally now. Okay, so now it looks like gold should hold about 1190. It's probably 1190 to 1240. Now it should, if you're a gold bull and you want to see a much bigger, more sustained rally, then what we would really want to see is we'd want to see the markets consolidate for the next couple of weeks. We don't want to see a straight up move. Straight up moves do not work, okay, as witnessed by the hogs last week, okay? If we look at the hogs, and we've been buyers of hogs, and last week I said that there should be some selling pressure in the hogs. The hogs went up 2 weeks ago, they went up 22%. Last week they came down about 15%. Now, they went up too fast, and that is not, if you want a sustained market. Now, I think hogs came down and held at a great level they should have held, but you can't, you don't, unless you're making a quick 10-minute trade or a daily trade, you won't want to see those kind of wild straight up or straight down moves. You want to be able to build momentum into a market that is going to sustain, and if you want on the bull side, to sustain a longer term trend. So again, I think hogs are fine, but certainly the selling last week, in fact, last Sunday night on my call, we recommended buying puts on hogs just for the reason, not because we're negative hogs, just because they had gone up too fast, they figured to sell off, and of course they did. The meats in general had a rough week, not as rough as hogs, but again, you're having a lot of people play on extremely light volume. Okay, same in the commodities markets. Volume is light, and if you remember these two things, equity markets will tend to rally in very slow conditions. Why? Because investors will continue to invest in the market because every day money comes in from 401ks, from IRAs, and all those things. So equities tend to drift higher because they offer some return, through dividends and whatever. Commodities don't offer dividends, so they will tend to drift lower. So when we look at the overall volume picture, grains have been very ugly. The meats were ugly last week. And what you want to really look for is, I think you look for an opportunity to buy, because we know that when the equities start to sell off, that money will flow into a new market, which would most likely be the commodities, grains, and livestock. We also know that they've already priced in about as much bad news as we can possibly see from that perspective. So we would look to be a buyer of these markets, and I think that you would find yourself to be a much happier camper when indeed you do see that. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line. Todd Bubba Horowitz, always great to be with you. Step out for a break. We'll be right back with more of Bubba's Bottom Line after the break. What's up, everybody? So anyways, I want to remind you, if you didn't see my hedging webinar and you'd like to see it, I will send you the recording. Go to Bubba. Email me at bubba@bubbatrading.com. I'm doing a webinar on futures on Wednesday at 6 Eastern Time. That link will be posted on the website at bubbatrading.com. You can go for it. It's free. You can come and watch and see what we're talking about, so you can see what I'm always going over. High school investing program, we're starting again, and we're running into a little bit of trouble. We need to raise some capital. So if you'd like to help us out, go to Patreon, patreon.com/Bubba Trading. And also don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. Now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And, so as we left off, we were talking about the grains and all the other things. And I think the last thing to talk about is the cryptocurrencies. I think here again, you're finding a market that is ripe to be bought. Okay. Now, again, it's not going to be easy. This is very similar to the internet. It's a technology type of thing. And you've got too many people fighting against it. Whereas in the internet, they weren't fighting. They were all saying it didn't matter. Well, now they're all fighting. But of course, the big hindrance here seems to be the SEC and not allowing us to get ETFs on these cryptocurrencies, which is bringing in a little bit of negative news. In the meantime, we're still holding up the levels pretty well. So I would expect to see some buying here. Again, I will repeat, I'm in. I'm losing money. Okay, not a lot of money, but I'm losing money, and I continue to buy. Okay, and I don't want anybody out there to go crazy spending all your money. But again, I look at it this way. This is like I pretend like it's one nice dinner I'm taking my family to every couple of weeks. That's what I'm putting in. Okay, I've probably got a few $1,000s involved or a little bit more. But again, this is not something that I'm going crazy on. But it's something that I think is worth the risk to be involved. Okay, so again, I'm losing money. I'm in. Myself, I'm in a little bit of Bitcoin, Ethereum, IOTA, EOS, BitShares, and Litecoin, okay, and Monero. So you know where I'm at. I'm losing money. That's the bottom line, and so we'll see. Okay, so there's some news over the weekend that the trade talks collapsed with China. They're not going to collapse. Do we really believe that China is going to let that economy get destroyed? Their markets are getting clobbered. The yuan is going to zero, okay, with the stronger dollar. This is all a big act. This is all a big play, and on both sides of the party, okay? I understand, but if you remember this, okay, the United States of America does not need any other nation to survive. Not that we'd be all thrilled with it, and I'm not saying that's the direction that we should go. But it is nice, as they say, to hold all the aces okay, and know that if they do fall apart, that we are perfectly capable of surviving on our own, okay? Now, these, in my opinion, we're going to see a deal from Mexico. I believe there's a handshake deal already in place. I think that China will definitely come to the table. They're trying to save face, and maybe they're going to try to stall out until the midterms. Who knows, okay? I mean, everybody's predicting a blue wave in the midterms, and I'm not so sure. Again, it's hard to fight the economy. Now, I don't think the economy is as great as everybody says it is, but it is better, okay? I think we've created more issues and some more problems, but I think in general, the economy is better. There are more jobs available, so you do have the opportunity to work. There are still a lot of these people like my age, okay, from let's say 45 to 65, that aren't trained well enough for some of the jobs, but there are jobs out there. Benefits are starting to come back a little bit. So I think that we will see, so we are seeing a better economy, okay, barely. All right, now again, I think that will change, but that is something we'll talk about in my commentary as well. But I do see a little bit of ray of sunshine, but I think when it comes to the trade wars, I think that's what will really help this settle out, okay? Because China is in big trouble, and so is Russia, okay? Their currencies are collapsing. They have been accumulating gold forever, and that's one of the big things that's going on right now as well, is as we talked a little bit about gold earlier, but the short exposure that we'll call that dumb money has to gold is record, biggest of all time. What does that usually mean? Well, it means that they're going to get caught in a short squeeze. Again, I'm a believer in the precious metals as well, and again, I trade them actively in very short bursts, but I own gold and I own silver from a long-term investing perspective. They are not a replacement for anything. They are not a hedge. They are a good, hard asset that should appreciate in value that you can use, and someday you might have to use it as a currency. But I would never buy it against my portfolio. We hedge our portfolios using the same products that we're buying. But it is something that I think everybody should have some representation of in their own portfolio. That is just something that I do believe in, and I think that it's a gold and silver, platinum if you play it. I'm only in gold and silver myself. Okay, and I prefer silver better than all of them. I think one of the big stories over the last couple of weeks is this Tesla story. Now, all of a sudden, you know, Tesla was going private, it's not going private, and that's what happened over the weekend. There's news that they're not going to go private, okay? I really have to wonder how this whole scam came about. You know, Elon Musk hates the short sellers, okay? Why, I don't know. I think, you know, in factuality, short sellers actually help the stock because they make it go up faster when it goes up. But I believe, my opinion, I believe he took a shot and wanted to squeeze the shorts, and that's exactly what happened. And I don't think they ever intended on going private. I don't know who would pay $420 a share for that stock. But in the meantime, now it's coming out. And I want to see how the SEC handles this, how the regulatory bodies go after this. Because this is a pretty serious crime, in my opinion. Again, I'm not a lawyer. I don't play one on TV. But this is a pretty serious crime. Because this was, in my opinion, again, this was true manipulation. Okay? So I think that's a problem that we can all see here. Now, we've had this big talk of continued socialism. And first of all, most people don't understand what socialism actually is. Okay? But it's also that there's a survey out that says the majority of young Americans are receiving some sort of welfare. Okay? Now, again, our goal and objective should be to get off the welfare state. Our objective should be to prosper. But when you have these politicians preaching free college, free healthcare, free this, free that, a monthly stipend, you cannot go. Now, again, Venezuela is not quite the same socialism that Bernie Sanders is talking about, but it always ends up like that, okay? Socialism does not work except in a regulated way, which you could make a case that the United States has some part of socialism, a component built in, okay, through our welfare, through our unemployment, through all these other areas of benefits that people can receive. Okay, so we do have some component of it here, and I think that's where we're falling into the problems, because we refuse to change certain things. But true 100% socialism does not work. You're seeing a perfect example of that in Venezuela and in other countries around the globe. And I think one of the big problems you are seeing as well here is global liquidity is drying up. Okay, now when we look at this and you take a look at the emerging markets, they're getting slaughtered. Okay, why? Well, because they took the chance, they took the opportunity to borrow money from the U.S. Okay, from U.S. banks at 2%. They're lending it out at 6%. Whatever. Numbers are not important, because they could base it on dollars. Well, with the dollars rising, okay, the cost of dollars, and everybody's all saying, oh, now the dollar's going to collapse again. The dollar, in my opinion, is 95 to 97 in the index, and the next time it's going to par. Okay, this sell-off was exactly what we expected. We talked about it last week. So, but because the dollars are so expensive, most of these emerging markets, most of their currencies are now inverted and not worth what they've got out. So it becomes a much bigger problem. And that's why we're starting to see the liquidity drive up. And then you take into consideration what's going on in Russia, what's going on in China, and what's going on in some other markets, and you're going to see that this could be a major problem. And it's something that, again, we continue to ignore because it's no big deal. Nothing is a big deal until it is. Okay? And I think that these are the issues that we have to face throughout these markets. Okay, you cannot continue to ignore what is happening around. Now, when you look at it from a trading perspective, you cannot fight the tape of the market or the actual direction or the footprint of the market that we're watching right now. The market footprint suggests the market's probably going higher. There's no reason to I am not going to buy, although I'm already long the market because of my IRAs and my 401k and so on and so forth. I am not buying here, okay, except what I can hedge, but I would not be surprised to see the markets go significantly higher from here, because they're not going to go down until they do. This rally will last until it doesn't. Now, there's a lot of reasons to believe that it will come crashing down, and sometime possibly sooner than later, but there's no point for you or me to try to guess when it's over, because you could have guessed for 8 out of the last 10 years and said it's over, and of course you'd be broke. So remember, let's not try to outguess the market or outsmart the market. Let's continue to watch the market footprint, and when you do that, you give yourself a much higher probability of being successful, whether you're trying to trade or whether you invest. Investors should always be in the market and just be hedged to a mathematical certainty and not worry about it. Okay? And if for those of you who didn't catch my hedging webinar who would like to, you can email me at bubba@bubbatrading.com, and I will send you a copy for free. In the meantime, we're going to step out here for a break and come back with my commentary on, what else? The Federal Reserve. We'll be back with more Bubba's Bottom Line after the break. Okay, everybody. Wednesday night, 6 o'clock Eastern, I'm doing a webinar on futures trading, part-time, SPEC trading, swing trading. Okay, it's free. All you have to do is go to bubbatrading.com. You can download the link and come and watch me. You can get the recording later. Again, you can have an understanding of how I come to some of the conclusions I come with. So anyways, Wednesday at 6 Eastern time, that is August 29th. In the meantime, our high school investing program, our 9th year, but we're running out of capital. Hopefully you'll be able to stop by and give us a hand at Patreon, patreon.com/Bubba Trading. And don't forget to catch the Bubba Show every day from 4 to 5 at LibertyTalk.fm. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Hurwitz. Welcome back, everybody. Bubba's Bottom Line. And of course, every week I give you my commentary, and a lot of times it has to do with something that was said or done last week. And, as you know, I said and have said the last few weeks that I'm pretty disappointed that President Trump is trying to dictate monetary policy to the Fed. The Fed supposedly, on paper, a private corporation. But of course, we had Jackson Hole, Wyoming this week, and Fed Chair Powell, who, listen, I think Fed Chair Powell could be one of the better Fed chairs because he's not in academia. Okay, he's really just a regular straight-up guy. But he gave himself a pat on the back for such a wonderful job that they're doing. And I gotta ask, you took $4.5 trillion or so. What did I get? It's like I get that cheap T-shirt. My kids went to Hawaii and all I got is this dumb T-shirt. Okay, $4.5 trillion got us what? Okay, to me it didn't get us anything. To me we've just got more debt. Okay, you need to forget about trying to time this rate increase and raise a little bit more aggressively now. The economy is very, very strong. Okay, or if it is, again, you keep telling me how strong it is. You keep telling me that you're not worried about inflation. So what do we know? We better worry about how strong the economy is. We better worry about inflation, right? This is again the same thing that always happens when everybody tells us how good everything is. It's the same as a coach when he gets the vote of confidence from the owner. The coach gets fired usually within the next week. Now I'm not saying the markets are going to correct, but the Fed is doing a very poor job here in the face of a very strong economy that is also in danger of overheating. You can nip it in the bud much sooner by allowing the rates to go higher is the way they should. Okay, but what's going to happen, in my opinion, is they're going to wait and they're going to wait and they're going to continue to pat themselves on the back and tell us what a good job they're doing, and then there's going to be a disaster, which is usually the way that this ends, because in their history, the Federal Reserve has never exited the markets properly. Okay, first of all, they shouldn't be in. That's number one. There shouldn't be a Federal Reserve. That's number two. And if there is going to be one, why aren't they audited? That's number three. But now you've also got Bullard comes out now. Again, this is the real problem. See, Bullard comes out and warns that we shouldn't be raising rates. Now, I don't understand. If the economy is as strong as they want us to believe it is, okay, then why should not rates be higher? Okay, there is a demand for higher rates. How do you think, again, these outside lenders, these peer-to-peer lenders, these subprime lenders, how do they exist? How are they prospering? Why? Because there is a demand for money. And the sadness of it all is that underneath the scenes, the banks are buying all of this debt that these peer-to-peer lenders are putting out there. So they're guaranteed for their money, and the banks are taking on undue risk. Whereas if we would just gradually raise the rates the way that they should and get rid of this ridiculous Federal Reserve that really has no clue and is, as they say, if you put them in the middle of the desert, they couldn't find sand. Okay, we would be in much better shape because the economy would take care of itself, because at the end of the day, asset classes will price themselves through real price discovery. We don't need the manipulation of Chair Powell, Chair Bernanke, Chair Yellen, any of them before Greenspan, name them all. We don't need them to manipulate the markets. We need the markets to price themselves, because they will, given their own free devices. So let's either end the Fed, audit the Fed, and get the rates to where they should be, so that we can actually see if the economy is growing and start to service this debt problem that we've got. That's it for today's Bubba's Bottom Line. As always, I thank you so much for being here. We'll see you tomorrow with Bubba's Daily Update. And everybody have a great week. And don't forget about Wednesday, my webinar on futures. Have a great weekend, everybody. Thank you so much. We'll see you later.